Hello, everybody. Welcome to Tuesday. Another really good day on the market. The S&P 500 was up more than 0.6% today. Another record close. Really, so far this month, we've had 11 trading days where the market was open, and 10 of them have been up. One was down, a whole percent, which is a lot, but we've recovered from that and now setting new highs. And things are very, very good. But one of the things that's very fascinating is this rotation that's happening. It started last Thursday, where even though the market was down a percent on the S&P 500, the small cap stocks were up, 3.5%. And so today, again, S&P 500 is up 0.6, which is good, but the small cap Russell 2000 index was up again 3.5%. And so, it started with the CPI report, which came in better than expected. Today we had retail sales that were better than expected. And, basically, we'd like to see rates be coming down, and the market's now factoring in a 100% chance of a rate cut in September. So we'll see how that works out. But we'd like to see them coming down because inflation's coming down, not because the economy is falling apart. Because that's the true soft landing scenario right there. Inflation's coming down towards 2, economy's still hanging in there. We can lower rates without creating more inflation, and at the same time, make sure we don't end up with a soft economy or a big recession at some point in the future. Theoretically, would be the idea, and that's why the market likes that. Um, and of course, if that is going to happen, if things are going to be good and they're going to be lowering rates and the economy is going to stay strong, then small caps would do well. However, reading a lot of articles about how much short covering is happening on the small cap arena and the small cap indexes. And so you got to be a little bit careful because sometimes it can just be a rally of a bunch of people getting rid of their shorts. You get rid of your shorts by buying back the stock and such too. And, when we look at the longer term, say 5-year run here for the small cap index, it's really just been going sideways for a really long period of time. It is making a very strong move. I will say that a lot of big rallies start with short covering, including the one we're dealing with right now on the S&P 500. From the end of July last year till the end of October, the market fell 10%. And then that first week of November, we were up 5%. We were up 8.9% for the whole month of November. And we've been marching all the way. Other than April, where we had a 5% drop, we've been coming up every single month since then. And that started but violently with this short covering. People felt like, hey, that 10% drop last year was just the beginning. It was going to get worse. Turned out to not be true. Earnings were good. Inflation got better. Artificial intelligence looked exciting, and it just chased all the shorts out of there and got the rally started. So that same thing's happening here in the small cap, I believe. Doesn't mean it won't continue, just like we've seen in the S&P 500. So again, it's something to watch for here. Again, if it is going to continue, it's because people are feeling more confident in the economy, feeling more confident in, taking more risk within the situation, which is what they call a risk on trade when people start to buy a lot of small cap. So still something to watch because the overperformance on small cap index versus the regular index has been pretty strong. Again, I'll mention what I mentioned yesterday. We do have these big companies going to be reporting earnings here, and that could drive, those stocks higher and maybe take some of the bloom off of the small caps. But we'll see, how this is going to play out. But nonetheless, that's what's going on today. A good day to be an investor altogether, and look forward to seeing what's going to happen tomorrow. Thank you very much.